Businesses need capital to grow. Most business owners look to local banks to get their funding, but a lot of the time this doesn't work. Banks have guidelines and strategies in place to help them operate more efficiently. But these strategies and guidelines tend to only make the process harder for business owners to secure the funding that they need. A good commercial lending specialist can help business owners find alternative solutions to local bank lending. In Deal Talk, we work through real-life funding scenarios, loan solutions, and positive results that have helped American businesses flourish. I want to talk to you about another deal that's in my book that we wrote a few years back called Yes, How to Get the Funding You Need to Grow Your Business. And the deal is, I believe it's story number 8 in that book. And listen, if you want a copy of Yes, send me an email. I'll send you the book. I think you'll enjoy it. I think it's got the first 10 deals in it. It's got the first 10 deals in it that we ever did. And it might be beneficial to you. It might show you some insight of how we came up with some solutions for, during those first 10 deals that we did as a company. But today I want to talk to you about Evans Glass. And at the time we did the deal, I think it's important to note that Evans Glass, and by the way, here is a coffee cup that I got from Mr. Evans after we closed his deal, and I still have it today because I'm really, really proud of this coffee cup. But Evans Glass is a company that was started by Bill Evans's father. At the time we did the deal, it was a 60-year-old company, been around for a long time. And basically, they installed glass in new construction and remodels and things like that for commercial and personal homes. And so what Mr. Evans decided is that he didn't want to just install glass. He wanted to fabricate the glass. So he was starting a new section of his business. And he had a long-term banking relationship with a really good bank. And then that banker, as happens in our lives, got promoted and moved on, and he was left with this brand new banker, as he described it, not me, right out of college and didn't really understand or know my business, okay? So it wasn't a personal relationship like he had. So I went to him, told him his idea, and they turned his deal down. He finally found a bank that had agreed to do the deal, and that bank had given him a commitment letter. And I want to explain to you today that there's a big difference between a term sheet and a commitment letter. With a term sheet, it's got a lot of different exit strategies for a lender. Okay, so they're going to give you a term sheet and say, these are our terms. As long as your underwriting is good, we're going to do this deal. Well, when a bank issues you a commitment letter, that is a commitment to fund. They have to fund, or you could actually take legal action against them if they didn't. So it's important to note that Mr. Evans had a commitment letter from a bank here in Nashville. And he showed me the commitment letter, and he said, what do you think? And I said, well, it looks like a pretty good deal. It's a little bit out of market. The bank was 1.5 points too high on the interest rate. They were 1 point too high in the origination fee for what was going on in our market. And they also weren't giving him enough advance for his real estate. I think they were at like a 70 or 75% advance, and I felt like they should be closer to 80% on the advance on his real estate that he was going to refinance. So I said to him, Mr. Evans, let me do this. Let me talk to the bank. Let me see if I can just get them to give you better terms that are more in market. And if they do, you take that deal, and it's a good deal, and you'll be fine. And he says, well, what do you charge me for that? I said, I won't charge you a thing. I'll just talk to the bank. I'll see if I can be the go-between for you and the bank and see what they'll do. So I did that. He agreed, and I did that. I met with the bank in the next day or two and sat down with him and said, look, he really wants to do the deal with you. You're 1.5 points too high on the rate. You're 1 point too high on the origination fee. And then you're not giving him enough advance for the real estate. If you'll fix those 3 things, he's ready to sign today. And this deal will be done and on your books. In my meeting, they said, man, Terry, thank you so much for talking to us. We appreciate knowing what his concerns are. We're going to go back and fix these. They actually came to our office. We're going to go back and fix these, and we'll get a new commitment letter out to Mr. Evans. Well, that didn't happen. They went back to the bank, got with their chief credit officer. They called Mr. Evans and said, we're not changing a thing. You need to sign by 4 o'clock today, or we're going to pull the commitment letter. Well, Mr. Evans is the type of guy, if you ever meet him, you don't back him into a corner. He's a very astute businessman. He has been the head of his association, with the glass companies and all, in 20 groups and things like that. He is a leader. He's recognized in his field. People call him all the time for, if their business is struggling, they'll call him and say, hey, will you take a look at it and get them to try to help him? He's that well respected in the industry. And he's not the type of guy that you back into a corner. And so they backed him into a corner, and he said, thank you very much. I think I'm going to go with Terry Luker. So he signed up with us. We charge a fee on the deals that we do. And he said, okay, you can go work with any bank you want. He said, don't work with Bank of Nashville because they've already turned me down. And I said, okay, no worries, I won't, And so I looked at the deal. I dug through everything, and I couldn't. When we finished our underwriting in-house, the deal was perfect. This should have been a no-brainer, easy deal for any bank to do. And I had done quite a bit of business with Bank of Nashville, and so I couldn't understand why they had turned the deal down. So I went back to Mr. Evans and I said, look, will you take the handcuffs off of me? He said, what do you mean? I said, will you let me go back to Bank of Nashville? And he said, there's no reason. They've already turned me down. They said they weren't going to do the deal. And I just told him, I said, I think they missed it. And he said, okay, it's not fair for me to handcuff you. Do it wherever you think you need to do it. So here's what happened. We go back to Bank of Nashville, but this time we're in the right department. Because inside of every bank, there's different departments. And if you have a deal that you're submitting for your client and you submit it to the wrong department, they're not going to understand that deal or want to do that deal, and they're going to pass on that deal. And then you're going to think, well, the bank turned it down. But it really wasn't the bank. It was that you were in the wrong department in the bank. So what we did is we took it back to the people that we work with at that time inside of Bank of Nashville. We sent them the entire package, the entire underwriting package, and lo and behold, they issued us a term sheet, and they ended up funding that deal. Not only did they end up funding the deal, the president of the bank at the time was Bill Nye. He called me personally and said, thank you so much for bringing this deal back to us. We missed this deal. So here's what we know that happened. Number one, it was with the wrong person in the bank in the wrong department in the bank. That person already had one foot out the door. They were transitioning to another bank, and so they really weren't interested in doing any more business. That person completely missed the real estate piece that was free and clear that we were including in the package to be refinanced. So it made the loan to value look like it was worse than it was when it was really a great deal. So here's the bottom line. His CFO is a really, really great guy by the name of Steve Byington. And Steve took the two sheets that he had, the term sheet from Bank of Nashville and the commitment letter from the bank that had given Mr. Evans a commitment letter. And I'm not going to say the name of the bank because I don't want to embarrass them. They're a great bank. They really are. They just simply missed this deal. But he took them and he laid them side by side. Here's the interesting thing. Our fee from Mr. Evans was $87,000 that he paid us to facilitate this deal. When they took out the fee, we still saved him because we got him a better deal with a better interest rate, with better terms, with more of advance. We saved him over $100,000 after he paid us our fee. So you brokers out there, when you go sit in front of a customer and a client and they say, well, wait, I got to pay you a fee. My response is always, absolutely. We get paid for what we do. But here's what happens most of the time, Mr. Client. Most of the time, because of the volume that we do, we'll get you a better deal than you're going to get on your own. So my fee is really doesn't cost you anything. It actually can save you money. And that's how we pitch it every time that we talk to a client about our fee. So here's a bank that turned the deal down, that ended up funding the deal, that built a great relationship with Mr. Evans, that he was still doing business with them. And he got his fabrication business up and going, and his business is just thriving. I know we share the same business coach because I met Joe Martin through Mr. Evans, and Joe Martin became our business coach for our company here at Alternative Capital Solutions. And so I get to hear some of how the business is doing still and all that, because we worked our way out of a job there. He doesn't need us anymore because the business is doing so well. And now his son is in and he's being groomed, to run the business and actually doing a fantastic job. And Mr. Evans kind of is the chairman and oversees everything. So it was a win for the client. It was a win for the bank. We saved the bank from passing on a really, really good deal. And it was a win for our firm because we picked up our fee and we got a great client in return for that. So the lessons there are, you can have a deal from another bank, but it still may not be as good a deal as you can bring the client. We saved the client money and we funded it through a bank that had previously turned him down. So it's important to build those relationships, to know where a deal should be in the bank. That's our intellectual property, ladies and gentlemen, as commercial loan brokers. That intellectual property is knowing where a deal should be, what department it should be in, and who you should be working with on any particular type of deal. Hey, that's it for Deal Talk today. I hope you learned something from today's episode. If you got questions, send us an email. If you'd like to get our book, send me an email, and I'll be glad to send you our book out. It won't cost you a dime. Have a great day, everybody.